Hi everyone, my name is Natasha and this is Kaylee, and we're here representing Mondo and Geek Girl Meetup. Thanks very much for coming along to Decoupling Banking Services. A couple of admin points to start with. The fire exits are here and back up the stairs that you came from. To get on the Wi-Fi you can go to .ideal, there's no password. There's also a URL on the screen there, just behind the lovely panelists' heads, polev.com/Mondo. If you can go to that on your phones, then you can take part in our little interactive quiz that we have later on. More of a poll, not so much of a quiz. The social media streams for the evening are going up on these two screens, so if you want to tweet us with the hashtags FutureBanks and Women in Tech, then they'll come up on the screens.
Okay, so shall I stand here?
Yes.
Tash and I met earlier this year and call us geeks, but we immediately started talking about banks and how completely useless they are. I had recently started working for a fintech company called Parity, and Tash was looking for a career change and dreaming of working for a mobile bank. So a few months later, Mondo asked Tash to put on an event that would get Mondo in front of the type of people that they hoped would one day be users or potentially employees, namely women and men that were really interested in disrupting fintech, but also passionate about gender equality within tech. So when Tash got in touch with me and asked if Geek Girl would be interested in collaborating, we jumped at the chance.
Should we just do this? We've got together a panel from companies that are really changing the way that we manage our money, the front runners in the UK fintech scene. Hopefully they can provide some interesting ideas on how UK startups are able to do that, and also on how they can maintain the momentum that they've already got to really disrupt the traditional banking services. Before I introduce Kirsty to take over and run the panel, I just want to tell you a little bit about Geek Girl Meetup and Mondo.
Okay, so Geek Girl Meetup was formed to highlight the great work being done by women in tech at the moment. So we do this by arranging monthly meetups, and we have a yearly conference. So this is Geek Girl Meetup at the moment. We are a growing organisation with sister groups being formed all across the world, but my very talented London team consists of myself, Kathy, Magdalena, Miggy, who are all here tonight. So if you want to talk to us about what we do, then feel free. We also have Robin and Josie, who split their time very glamorously between New York, San Francisco and London. We have got an amazing conference coming up on the 26th of September on creativity, technology and the future, and there are still some tickets left. So I hope to see a few of these faces here. We've got over 20 amazing speakers and it's going to be excellent. And if anyone wants to sponsor it.
Okay, on to Mondo. So definition for you up there. Given the many ways that we can spend our money at the touch of a button from our mobile phones, to book a cab, to buy food, to order food, it's remarkable that there isn't already a way to manage that money at the touch of a button. And that's what Mondo are doing. They are creating and building a new smart mobile bank from the ground up with the functionality expected of mobile users today. Instead of charging you for mismanaging your funds, Mondo want to help you manage those funds better. So think completely up-to-date spending and account balances, instant payments, no charges for using your card abroad, and the useful data and insights that will help you manage your money better. Mondo are hiring. They're looking for anyone who is fed up with their current bank and want to help create the amazing and cool bank of the future. Specifically looking for a content creator, a community manager, and an iOS developer. So if you have any of those skills, then please speak to Tracy or Jason, who are waving at the back there, and they can tell you more. They're also running a beta test starting in October, which will enable you to see what the future of banking will look like, but also help to create that. If you're interested in that or just learning more about Mondo, go to getmondo.com.
Okay, so I just want to say a huge thanks to Idea London for donating their wonderful space for us today, and I want to introduce Sabrina, who's going to just give a few words about what they're up to.
Hello. Welcome to Idea London. I'm going to keep it super brief, but just want to say that it's a space that's a collaboration between three quite major players. There's UCL, the university, which I'm hoping most of you have heard of. There's Cisco, big technical company, and DC Thompson, who are mega publishers. bring those three together, and we offer something quite unique to startups. So we have all sorts of companies here. We have people working to pull together assets in a building. We have people to promote employee advocacy via social media. We also have some fintech companies, including one called Curve, that is brilliant. They're trying to pull together everything onto one card, all your financial cards, all your loyalty cards, your Oyster cards, everything together. So we have a whole raft of things offered to support them and host events like this. And it's a really great space. If any of you are interested in joining this space, there's often space available. There's no kind of application deadline, it's rolling, because we support companies when and if they need it. And you can go to idea-london.co.uk, and there's application forms and everything there. We also have a device lab if anyone needs to test apps on devices. So come and find me afterwards if any of that sounds interesting, and I can tell you a bit more. Cool, thank you.
Thanks, Sabrina. A quick thank you to Virgin Wines for providing the wines. There's lots more to drink upstairs, so afterwards, feel free. And McLaughlin's for those amazing sweet potato crisps that I hope you all managed to try.
We also have Jess in the building tonight, so Jess just wanted to say a few words about Techstars. So.
All right, guys, I had to put my crisps down. But on the topic of disrupting banking, how many of you guys are currently working in startups related to financial services in some way? All right, awesome. So my name's Jess. I'm a director with Techstars, focused on our FinTech accelerator. If you hear of Barclays Accelerator powered by Techstars, that's us. We're currently on the lookout for the next 10 startups that we're going to be investing in for our program here in London. If anyone's working on something across financial services, whether it's payments, wealth management, insurance, investment banking, or even something slightly tangential, machine learning and cybersecurity, whatnot, if you're interested, you'll see some flyers around. I'll leave my cards around. Feel free to get in touch. Happy to have coffee or arrange coffee with our managing director. We also have an event tomorrow evening to go into more details on the program with execs from Barclays talking about some of their pain points on the inside and what it's like for them working on making these changes actually happen within a big corporation. You can't really see the bit.ly link, but I'll write it on my cards and leave them around later. Anyways, thanks for hosting me, and I'm excited to hand it back over.
Okay, so finally I'd like to just introduce everyone to Kirsty from Tech City News. She's going to be moderating our panel today, and she will introduce our amazing speakers for us.
Oh, well, thank you so much for putting us through the hello and welcome to Fabulous Idea London for Geek Girl Meetup UK and Mondo's The Financial Revolution, Decoupling Banking Services. My name is Kirsty Stiles. I'm a senior reporter and senior agitator for Women in Tech and Tech for Good over at Tech City Towers. I just got really loud. I went a bit robotic. Is that okay? I'm also a podcaster on economics, presenting the weekly economics podcast for the New Economics Foundation, which is about economics and happens every week, as the name suggests. So I'm hoping I can use some of that experience to get under the skin of some of the biggest issues facing the banking sector today. The opportunities for entrepreneurs like many of you working in fintech, as well as some of the challenges for many of the women working in tech today. So thanks very much for having me and giving me the opportunity to chat to such an interesting panel of wonderful women in tech. As Tash and Kaylee have already said, it's hashtag Future Banks, hashtag Women in Tech, and hashtag GGM15, is that right? So don't say anything long and interesting, just put the hashtags in there. The panelists' Twitter handles are all up on the screen there as well if you want to tweet them direct. And now on with proceedings. So, as I'm probably more aware than most as a journalist, fintech is stealing the headlines in London every single day. Here in Shoreditch, the city meets Tech City, which seems to have provided the right ingredients for expertise, innovation, and cash, frankly, to bring some of the newest ideas in finance to life. Fintech now employs some 44,000 people in London and has produced a whopping 8 fintech unicorns, according to GP Bullhound. That's businesses that are currently valued at more than $1 billion, not actual unicorns, which is a sad thing for me every day. And includes the likes of TransferWise and Funding Circle, who we'll be hearing from later. Fintech, therefore, represents the UK's biggest unicorn sector, a herd of unicorns, if you will, all contributing to making the UK the most successful tech cluster in Europe. But before we get on with the discussion, we need to look at the results of our super cool poll. No, we need to do our super cool poll.
The URL is there, so pollev.com/Mondo on your mobile phones.
Get your phones out.
On your smartphones.
Get your smartphones out. If you've got a feature phone, get out.
Oh, we've gone back. Go back. Go back.
Yeah. Has anyone not got a phone with them?
Who doesn't have a phone with them? I mean...
Oh, yes. Oh, I'll get my phone out as well.
Okay.
Natasha's driving. I'm going to just be noisy.
Yes. I will sit back down again.
Right. I hope we don't crash the Wi-Fi.
Have we got lots of people on that? Yeah.
Stick your hand up when you're on it. Very good.
4 people at the moment. Excellent.
pollev.com. So you're hearing me thinking. .com/Mondo. Stick your hands up if you're on it. Very good. The back is doing better than the front. Has anybody not managed to get on? Oh no, we've broken the internet. Oh, do we need to install an app? No, yeah, I think easy as pie, just hang tight, you're ready to go. This is, I don't think I've ever done a poll live at an event. No. We might have practiced beforehand, but we didn't.
So let's maybe do the introduction.
But everyone's kind of looking at things from here, and I'm sure it will be. I was trying to get in the logos and my head. I tried to do a nice face, but I can't do nice faces pictures. Yeah, feel good? What's there? Shall we do the introductions, yeah? Right. As handily suggested by Leah, we're going to do the introductions to the panel while we're waiting for our super cool poll to get going. From this end to that, do you want to just give us a little introduction to who you are and what brought you into FinTech to where you are today? Eileen.
My name is Eileen Burbage. I'm wearing sort of 2 hats, but they kind of complement one another, and I'll sort of switch between them, but always disclose which one I'm using at the time. So I'm a partner at Passion Capital, which is one of the early stage venture funds here in London. We are the seed investor for Mondo, but then also separately, and also part of the reason I'm so excited about the investment in Mondo is because as of July, I'm the UK FinTech Envoy as appointed by the Chancellor and Treasury. So really excited about FinTech generally in terms of how much it represents to the UK and why it's so important to the economy here.
Hi, I'm Leah Templeman. My Twitter handle is not @Idea London or whatever was up there before, but @Templeman Leah. I work at Mondo, have been since February when we started. Previous to that, I did a couple of years management consulting and then made a kind of soft jump into startups through Vita Coco, coconut water company. But didn't find it anywhere near as fascinating as I'm finding FinTech and Mondo specifically. So.
Hi everyone, my name is Wendy Lee. I'm a product manager at TransferWise. For those of you who have not heard of TransferWise, it's a fintech startup in London, and what it does is it's an international money transfer platform that allows you to save up to 10 times what you would normally use or what you normally get by using a bank to send money abroad. And actually, we have it's a special treat for the audience tonight. We have an extra ticket for Web Summit, which is coming up in early November, for any female entrepreneurs in the audience. So if anyone's interested, come speak to me after. Nice. I've already got my microphone here somewhere. Hi everyone, thanks very much for inviting me in today. Great to see so many people here. I'm Laura from Funding Circle. Just a quick show of hands, how many people have heard of Funding Circle? That's great. I remember back in the day, 4 years ago, when I started at Funding Circle, and not many people had heard of it. So I've been there for a few years, seen it grow to sort of the 350 people that are working there now, doing sort of a lot of small business loans. So for those of you that don't know, we're the leading marketplace for business loans, and we facilitate UK and US SMEs to borrow directly from individual people and big institutions and organisations, so investors big and small. So I used to work in a big bank and decided to work in a very small startup, and it's been a great ride, and I can't believe I've been doing it for quite that long. But for any of you there thinking about making the jump, I would say absolutely go and do it.
Wonderful, thank you, Laura. Well, on that note, our poll is ready to go. So you should all have a screen. Yeah? You guys come here. So.
That was just a test to see that you could actually work the poll. So we're going now.
Okay.
Oh, we're still moving. People undecided.
Oh, do we just
you keep going. You keep going, and then you're supposed to say funny things in the middle.
Oh. Undecided. What do I do? And FinTech wins. Okay, so half the people in the room know what we're going to be talking about. The rest of them, not so sure. Okay. Do you want to read this out?
Legacy banks provide a lot of services, one of which is the current account. Which of these features of the current account would you most like to see improve?
I feel some market research coming on.
The insights provided over your spending, making payments both within the UK and internationally, integration with other banking features or apps. None of the above, just higher interest rates.
Oh.
Ooh.
I don't think I think about banks enough.
Well, you
not in a current account sense, in the bashing the banks, of course.
Oh, this is interesting.
Making payments
So insights are winning. Good news for Mondo.
Oh, I see. Would you like to improve? Got you.
Have you voted?
Yes.
Okay.
I think I voted wrong. So do people want to get back to the insights? So that was.
Oh, can we go back? We can go back.
Right,
so insights are winning.
Overwhelmingly, people want better insight provided from their spending.
Oh, late
somebody wants integration. Right, next.
Okay, next. Someone's already voted. If your current account had a personality, would you prefer that it was tough, controlling your spending by giving you access to a pre-agreed monthly allowance, or helpful, providing you with insights and charts of what you have spent and when? Come on, insights. Okay, insights winning again. Late voters again. TransferWise, no longer Mondo themed. Today, TransferWise transfers more than £500 million every month, which is approximately 2% of the UK market share. In 5 years' time, do you think that they will have still 2%? I think that was Wendy. Are they yet? A minority.
100% of the UK market share.
50% a majority, or 100% of the UK market share.
2% is that retail market share?
All of it.
Can I abstain?
Where do you work?
At UX. I've never heard of either one of you driving
Ooh. Wendy. Well, that's good. At least you're going to grow. Ooh.
This is interesting.
There we go. It was supposed to be. I think we... Oh. Okay. So everyone voted.
How many people are in our poll?
Oh, I can tell you afterwards. Funding Circle. So banks are the primary source of small business lending. More than 10,000 businesses have now used Funding Circle to borrow money. In 5 years' time, who do you think will be the primary source of small business lending? Legacy banks, peer-to-peer lending companies like Funding Circle, or other third-party lenders?
These are quite complicated questions. I mean,
can you keep up?
There's only one answer to that.
It is interesting.
Yeah, you should definitely get it.
Send this to the team.
They just sort of move on their own. And finally, there should only be one answer to this question. For the fintech revolution to succeed, startups have got to reach scale more quickly than the legacy banks can change. Who will win the race, fintech startups or legacy banks? Ooh, who is that?
Where do we vote win-win?
Only winners.
These are tough questions.
There we go. Yeah, that's it. Well, interesting. I hope that was interesting and woke you all up. So now you're ready for Kirsty to take over.
Well, we've just found out the answer. It's just going to be fintech startups.
Should we just leave?
Right.
There you go.
So everybody's introduced themselves, so I've already done that. We are going to have a couple of minutes from Eileen, who is our veteran on the panel this evening, in a young sector, so that's okay. And a newly appointed government advisor, as you said, of fintech, the first ever specialist advisor for this increasingly important sector. So she's going to talk for us for a couple of minutes about her experience in the field, what kind of things that are exciting her at the moment to date. And then we're going to open up the discussion with Leah, Wendy and Laura, and then we'll open it up to you guys. Please feel free to stick your hands up and get me to shut up whenever you like. I'd also like the question askers to be as diverse as our lovely panel if we can. So Eileen, over to you.
Okay, I'm not going to talk for very long because us old people, we kind of don't really retain very much in our heads. No, but I was just going to talk a little bit about why I think fintech, as I alluded to in my introduction, is so important to the UK and why the government perhaps thought it was worthwhile to appoint an envoy for the first time and I guess what purpose that is meant to serve. Generally, I think everyone in the room, given the show of hands earlier and all the answers to the sort of poll questions, is pretty well versed into, or at least really receptive to what's happening in technology or in digital. I think it's worth reminding ourselves that maybe the rest of the country or the government itself might not recognize or fully appreciate how strong the sector is. But my point in raising that is that they are realizing it now. So the digital economy does account for 10% of the UK GDP today. It is the fastest growing sector within the GDP. It's estimated to contribute 12.6% next year, 15% the year after. This has grabbed the attention of politicians, of policymakers, especially when we're coming up to an election early in the year. And it's something, though, that has just continued to gather more wind in its sails. If you think about then that sector and how quickly it's growing, as the government tries to concentrate on specific areas where it might have impact or where it might be able to encourage and accelerate growth, fintech is naturally a really natural place for it to shine. I've said naturally twice in the same sentence. Sorry. This is what happens when you're old and you're avowed. So, for instance, when you think about the digital sector, I don't know if people saw that, more than $1 billion was invested in digital in the UK in the first half of this year. That's 20 times what was invested in the sector 5 years ago. Of that, more than 40% was in London, concentrated in London, and of that 40%, another 40% was specific to the fintech sector. So again, if you're a policymaker, if you're the government, if you're recognizing what's happening within digital, you're trying to look for areas where you can accelerate and make a difference, fintech is a really natural place to gravitate. Another reason for doing that is because you're probably trying to protect your incumbent industry sectors. Obviously, you can't sort of support new sectors at the risk of alienating what's already contributed so much to your economy. Financial services is hugely important to the UK, not just in London, but in Edinburgh, in Leeds, in Durham, in all sorts of places across the country. And for example, you think about what's happened in financial services, you have 300 of the world's banks that have their headquarters here. Because of the time zone and where we're placed in GMT, you have over £3 trillion that passes through London every day, just on Forex or through remittance. You have over 100,000 knowledge service workers in the sector. You also, though, have a crisis that happened in 2006-2007, which was a massive wake-up call, sort of underscoring how, even with all the stats I just said, too few large institutions controlled too much of that flow. And so the government, kind of taking all of this into account, has appreciated the value of increasing competition, encouraging new challenger banks to get established, whether it's Mondo or others, trying to be more progressive on the regulatory side and looking at things like digital currencies, blockchain, and inviting reviews into Bitcoin. It recently opened a review just the week before last on how to modernize anti-money laundering, which is a huge sort of pain in the side for any new financial services company or consumers thereof. And so it's really just trying to capture what's already happening in an increasingly important sector for the country, and then what it can do to make a difference. So as an envoy, I get to fly the flag and say, yay, UK fintech, but also trying to tell sort of HM Treasury and Number 11 what things the sector needs in order to be able to go a little bit faster or to grease the skids and do it a little bit better. So if anyone has input that they've wanted to try to get into, I don't know, Number 11, Treasury, BIS, other government organizations that either support or at the moment might hold back fintech or generally digital companies, please let me know, get in touch, because that is supposed to be what I do as an envoy. So I'm happy to help, but hopefully that helps a little bit.
Yeah.
Okay, great.
Thank you. Well, considering that you were concerned, yes, and you were concerned that you weren't going to be able to. That was wonderful. That was really, really good. Thank you so much. So, on with the questions. You may well have noticed that the title of our talk is Decoupling Banking Services. And so my very first question, which some of you in the fintech industry may well already know, what is decoupling? Why is it so important? And why is it happening? And we're opening this up to everybody, so if anybody wants to jump in.
Well, I think it's separating out what has typically been done by one big, large institution. And so we've seen quite a few different types of financial services companies doing different elements of what a bank has traditionally done. So it means that instead of going to the bank to transfer your money, you can now go to TransferWise. Instead of looking at how much you spend at Pret a Manger, you can now go to Mondo, or whatever it might be. Or if you want a small business loan or you want to invest your money, you can go to Funding Circle. There's different ways of picking apart what traditionally has been done in one way.
Sure, and I guess what's the purpose of that? Why does that need to happen, or why is it just naturally happening?
I think it's interesting the financial services space has been slow to adopt the sort of internet age. So you look at something like Amazon or eBay that has been around for a while, and it's only now that really financial services is really getting into its groove of being disrupted in this sort of innovation space.
Okay. Anybody else? You've done it?
I'll pass it in.
Yeah.
Okay, so I think also to your question, I think the reason that it's important to consumers as well as maybe an investor point of view is you're unlocking value if you decouple all these services from single providers. So a metaphor I was using earlier is if you look at sort of the first .com boom and you had portals like Yahoo or Lycos, if you guys can remember those, you would go to Yahoo and do Yahoo Travel, you'd do Yahoo News, you'd do Yahoo Shopping, and you'd do Yahoo everything else, weather and everything else. obviously, from an investor point of view and for the economy and the industry, a lot more value was created when you then had lots of companies competing to offer you the best travel websites, the best ticketing, the best weather information, the best shopping, the best commerce. So from an industry point of view, a growth point of view, and productivity point of view, this is only going to be helpful to the financial services space. I think from a consumer point of view, it's more interesting because you get specialized and more sort of consumer-centric services from people who are only focused on solving one very important problem for you instead of trying to just keep you locked into a walled garden.
So I guess then the natural next question is this the end of the big banks? I don't know whether anybody would be terrifically upset, but is anybody here from a big retail bank? There he is. Is that true? Oh, but he's looking to move, don't worry. Yeah, so what do you think about that, Wendy? Is it the end of the big banks that we've all grown up with but perhaps not loved?
Well, I think the banks are already taking a bit of action. I mean, I know like TransferWise has definitely had an impact on the traditional banks' FX business. So and you see now with their types of advertising that they're trying to make a comeback or take a hit against like our type of advertising. So I think in general they need to have some sort of response. Otherwise, it's not going to work if they continue the way that they've always been doing business. I mean, they're really big, so it's hard to bring some, like a giant dinosaur down all in one go, but I think it's time for them to realize that this is a wake-up call, right? They can't continue like this forever. Yeah.
Okay. Do you think some of them are too big to change?
I think further to that, yeah, their size is both an advantage and a huge disadvantage. So I think the advantage for them is it's going to be a slow process. But the disadvantage is they find it very difficult to make these changes, to be agile, to be quick, and to react to what customers want. And so I think long term, it's going to be banks who can do that, who are customer centric, and who are building something that customers really want, rather than giving them what they've always had and not focusing on them, that are going to win long term.
Right, so one of the bigger trends that I've seen this year is actually banks trying to work with startups, trying to have an accelerator, Barclays Accelerator, for example. Do you think that's the kind of route to change?
I think fundamentally, their systems. I think fundamentally their systems are the core banking system. Makes it very difficult for them to make a meaningful change. And they certainly can work with innovative technologies and new companies and try and add bolt-ons, but it's difficult for them to fundamentally change the way their business works and to react quickly.
So I was just going to say in here, I'm going to do two hats. My first hat was my passion hat on, investing in Mondo and supporting startups. To couple your two questions together, I do think if I was at a big bank, I would be extremely concerned. I think to their credit, though, they are more aware of this and actually more proactive than many other industry sectors before. So if you look at publishing, you look at news, you look at music, you look at education, I think a lot of these industries basically got completely wiped out with the incumbents. I think banks are not going to let that happen. It might happen anyway, but they're going to try not to let it happen, and they're going to resist. But I do think they're going to run into trouble. With my FinTech Envoy hat on, we're all one big happy family, one big happy industry. The two do not, no, this is just genuinely serious. The two cannot exist sort of without one another. For example, Barclays has been on the record as saying it spends £3 billion a year on its annual IT spend. I would back a startup that was just trying to service part of that budget on an annual basis. It is a massive industry, right? And it is very much, it's very symbiotic in that we can't have new financial services trying to decouple the existing services while those existing ones still in place. And so you've got a framework and then you've got new ones coming in. The two need to coexist.
We already have two questions up here, so I'm going to calm down.
Can I just jump in there? If you look at the banks and how much lending is done, for example, to UK SMEs, so small businesses that are the backbone of the UK economy, there's still sort of £7 billion that's being lent every month by just across all SMEs, and therefore the alternative finance, the new players in this area are still relatively small. I mean, we're doing about £50 million a month, but there's a lot still there to serve, and I think it's all about addressing the customer. So if we're providing a service to the customer that's better at a bank, then customers vote with their feet. They'll go to the bank and do that. And what we're addressing here and what we're providing is just all out a better service, and really what the customer wants. As long as we keep doing that, and if the banks, they are looking at bringing that back more, they have whole innovation teams. I know they've got teams of individuals that are specifically looking at what companies like Funding Circle, like TransferWise, are doing on a day-to-day basis. So they're certainly they've certainly taken notice more recently.
Thank you, Laura. We have a comment here. Do you want to say who you are?
Sure. My name's Anisha Pru. That's a very loud microphone. Anisha. I work for IBM. So I don't work for a big bank, but a lot of my clients are big banks, and I just wanted to say it's not so black and white. A lot of the banks, the future, I think, is an ecosystem, so it's working together. The API economy is real, it's out there, it's happening, and second your comment, they are investing loads. There are smart people in these banks in London, so I don't think it's us versus them. I think it's ecosystem, work together, change the future.
Lovely collaborative comment, but that's not a very good debate, is it?
Yeah, just to add to that, I absolutely agree. I mean, TransferWise would not exist without our partner banks. So TransferWise acts as like an intermediary between banks and banks. So you would transfer money to TransferWise's account, and then TransferWise would then send money to whoever your recipient account would be. So we act as a sort of an in-between. But it would not be possible if we didn't have partners who are banks who would then make the flow seamless.
Cool. Right, we have a question here.
Hi, I also don't work for a bank or a challenger bank, but I also have clients in those banks, and I'm working with some of the smart people who are trying to work out how to work more like startups. A couple of people have said that banks are trying to become more customer-centric. To what extent do you think it's a disadvantage of the large banks that they're trying to be for everybody, whereas startups can be a bit more focused in serving customers or serving a particular set of customers?
Good question.
Well, I think if you take the focus on what you're doing day to day to go and do something else, then the focus will be lost somewhere unless you have a really heavily resourced team within that. So I think it's a risk. If you're just building a new house from scratch, you can build it however you like. If you have to knock down the old one or make sure the old one doesn't fall over, then obviously that's more of a challenge. So I think that it's good. I mean, the banks have been there for a long time and they have a lot of experience in what works with customers and what doesn't. So it's how they can capitalise on big data and other information that might be there to serve those customers. Does that answer your question almost?
Oh, we have more questions. Here we go. You're welcome to say who you are if you want to tell us.
Hi, my name is Alexander. I don't work in fintech, but I am Polish. I came to the UK 6 years ago, and one of the first things I've noticed is how antiquated the service, like the financial services, like the consumer financial services are in the UK. And my question is, why now? Why only now? Why, there are huge amounts of money in the financial services. Startups exist apparently for some time. They try to revolutionize a lot of industries. Why the fintech revolution is starting to happen only now, not, I don't know, 5-10 years ago?
So my personal theory is there's a couple of reasons. First of all, if you look at what happened in the first dot-com boom, and so when internet services first came about, what happened first was consumer services being disrupted. So you had these old companies like Yahoo, AOL, Lycos, and it was consumer-based offerings. Salesforce, which is arguably one of the most valuable enterprise companies in the world, was not actually established or even founded until 1999. So it came in a second wave after you already started to see some of these first consumer businesses be successful, even fail. I think that the same was happening in the the second wave, where these enterprise services came after you had new social services, new ways to take photographs, new ways to share information, and then you started to go into the enterprise, of which financial services was a sector already untapped. I think the other reason is something that I alluded to earlier, which was the financial crisis right before you did come from Poland. I think 2007, 2008 really unleashed, for good reasons and bad, a lot of talent into a new ecosystem where they were less risk averse. Also, they didn't have a safety net, and also they lost their jobs, but they had a lot of experience in working in financial services companies and then realizing there were new technologies they could take advantage of to start new businesses. At the same time, as I was saying, I think the government was then supportive of that transition. And then also from an ecosystem, I think the UK, this sort of software economy, digital economy, whatever you want to call it, is only getting to the point of maturity where it can address financial services. I've been here for 11 years. I think if someone tried to do a fintech revolution 8 years ago, impossible. We just did not have the depth of skills or experience of building other types of internet companies in order to do that successfully. And then the other thing is sort of the capital. So I think people are investing here because it has become a bit of a perfect storm and all of those elements are coalescing, so it's now happening. And I think at the same time, banks are just hemorrhaging. People are finally realizing that the large retail institutions, again, probably because of the crisis, are not run as efficiently as they could be and not offering services that people really want to use.
We've got a very participatory audience here. I'm going to go over here.
Hi, I'm Katerina. So I used to work at Crowdcube, so I used to work at a fintech company, and I had a similar experience to you, Laura. I was doing events at Crowdcube a year ago and going, not even who's heard of Crowdcube, but who's heard of crowdfunding, and nobody knew what it was. I don't work there anymore. I'm learning to be a JavaScript developer, but my next question is, what do you guys think is the next thing that really needs decoupling? So what's the next thing the banks are doing really badly that there's a hole for someone to swoop in there and take it?
Current accounts, obviously.
Other than what you guys are doing.
Does anyone have that?
Banking only or any industry?
Fintech.
Yeah, I mean, it's convenient, and so yes, Mondo had on current accounts. FinTech Envoy had, but I do think current accounts and sort of the hub of a hub and spoke model of what consumers use is important. I think, though, there's also wholesale banking, which we really haven't touched on a lot, sort of business-to-business banking. And then I think there are other things which are even less sexy, like fraud. And I mentioned earlier, like KYC and AML. I think a lot of these technologies or these kind of features that support financial services are going to start to get uncoupled, because right now, for instance, KYC and AML, a lot of companies use a company that basically has a massive call center or a room full of people that are manually going through and trying to check someone's background details. That is obviously not innovative, efficient, or the way the ecosystem is going to grow. So
insurance, specifically home insurance. So our house got burgled about 6 months ago, and it took 6 months to actually get any sort of claim back. I've probably had like 10 or 12 calls with the insurance company, which was part of a bank. I think it was part of Lloyd's, and yeah, it was just a nightmare.
So fortunately, there's a startup bootcamp dedicated just to insurance, so should get some good stuff out of that. Anybody interested in blockchain, cryptocurrencies, what that might be the next kind of crest of the wave? You might be able to tell us.
Yeah. Sure. I mean, the government's really interested in it. I don't know if people are aware. So the government really did hold a review into blockchain and using cryptocurrency and digital currency, which was well before anyone in the United States did it, even though they would have to do it on a state-by-state basis. Additionally, the Cabinet Office is actually writing a paper now as to how the government can use blockchain internally. So I do think the blockchain, as it represents a decentralized register, is something that everyone recognizes could be really useful, could help with a lot of things like KYC and AML, could make it worse, could make it more difficult, but it is clearly the way future, or the way forward, and how we get there is what the government's looking at now. I don't know, are there any people from startups or from companies that are doing blockchain or Bitcoin things? No. One.
I mean, I don't work for a blockchain company, but I work for I work for Innovate Finance, which we work with you quite closely, Eileen. And within my role at Innovate Finance, I specialize in working with the blockchain and digital currency companies. And it's really interesting to see that over the past 6 months, actually interest has moved from it just being dominated by startups to now that all of the large financial institutions are looking into these technologies. So it's really moved from being quite a niche area to being extremely interesting for large financial institutions. So it's been interesting to see that move over the last few months.
What kind of applications are they? Is it just for a transparent ledger?
I think in terms of the applications that I've seen, a lot of banks are looking at it in terms of fraud, as you mentioned, but I think it's still at an exploratory stage, so everyone's just testing out the different applications. I don't think anyone has come out with the killer app yet, so it'll be interesting to see what that is.
What a knowledgeable crowd. Were there any more questions from the audience while I'm running this loads?
You were here anyway. I wanted to ask about the cycles we go through, because what happens, I mean, I was in banking for many years as another old person, and what I saw, you won't feel so alone, Eileen, but what I saw is that we go in waves. So what happens is people specialize, things shrink, they disintegrate into granularity, and then soon enough things start to become supermarkets again, you get big brands coming in, and you get another wave of that. We've just gone through a recession, so it's granular, and you can start to see that granularity is starting to coalesce, and we'll go into big brands any day now. And so I just wanted to know how the startups are going to cope with that, and how do you continue to compete with banks as they, when the customer acquisition cost is so cheap for them because it's aggregated over economies of scale and all that sort of the back office and all that. How do you compete with that as that wave takes through?
So I think as they start to coalesce again, I think it's something that actually startups can address directly with this hub and spoke model that Eileen mentioned. So one of the things that's very core to our offering, for example, is that we have an API, an open API. This obviously, many benefits. One is that customers have access to their own data, but the other is that long-term, potentially other startups can plug in and get access with customers' permission to their data. So I think that's one way. In terms of addressing customer acquisition costs, I think generally we're moving towards a very customer-centric kind of, well, I think all companies need to be very customer-centric. Basically, you now feel like you can get what you want when you want it. Yeah, and so just like the cost of acquisition may be low, but I think actually people are fed up with traditional offerings a lot of the time, and so they're really looking for that differential experience.
And I'd probably just add to that with the banks, although their customer acquisition, they might be able to work with one customer through this and this and this. Actually, they are very capital intensive in terms of they have a lot of requirements to hold certain capital. They have very sort of outdated systems that cost a lot for them to maintain, to update, even to just stand still to an extent. I mean, we all know what happened not that long ago when the bank's online systems crashed several times, different providers. And for the very fact that there's a very expensive branch infrastructure network, actually what various different providers and platforms are doing, Funding Circle being one of them, is actually stripping away all of that cost and giving that cost to the consumer, to that retail end user. Although I'd ask, a few years ago, does anyone lend to small businesses? Probably all go, oh no, I don't do that. Maybe some people do now. But actually, if you had a bank current account a few years ago, you were lending to small businesses, but via the banks. So it's sort of taking that ownership and giving it back to that individual and to that customer. And what we're seeing now is with a lot of the banks, they're actually breaking up. So I think we're going to get more granular. You've got RBS actually disbanding into Williams Glyn in the north. You've got various other, HSBC said today that they're rebranding to HSBC UK. Which more, but the point is that there is difference. How will we ever know which one is which? Exactly. But I think that the point that they're making is that they have to actually decouple themselves, sort of, to then be able to address the market. And all of this has come in since the financial crisis. So I think that maybe in 10 years' time, some of the startups and whatever might be in the system then will aggregate together, and I think there will be synergies and economies of scale. But I think there is still more disbanding being done before we get to that point.
So Wendy used to work at Goldman Sachs. I don't want to dob you in, but
it was only an internship.
Yeah, well, it was only, so perhaps not necessarily touching on the breakup and the cycles, but the culture and things like that must be quite different from there to where you are today. Do you think that's a selling point for kind of growth?
For attracting employees, for sure. Yeah, I mean, at Goldman, I was working 100 plus hours a week, so it wasn't long before I realized that wasn't the right place for me. I think for me, like also coming from, so Leah and I both worked in consulting before as well, in addition to working in finance. You know, you're creating PowerPoint slides day in and day out, and at least for me, I personally didn't feel like I was doing anything that was adding tangible value or impact to anything that I really cared about. And with TransferWise, I was a customer before I even joined the company. It was a cause and it was an issue that I identified with personally. You know, transferring money was such a big headache, and I rarely did it before TransferWise just because it's so expensive and it's really a tedious process. So I think to answer your question about how you know, from TransferWise's perspective, one of the things that they're fighting for, and which I really think is a noble cause, is trying to bring more transparency and fairness to the finance industry, which the banks are notoriously known for not doing so, even though they have the capability, but they just choose not to. And TransferWise has also launched this political campaign called stophiddenfees.co.uk. I don't know if any of you have heard of it, but basically is to lobby the government to force the banks and brokers to stop promoting 0% commission and free transfers, because it's never true. They just hide it in the exchange rate or in the fees that they charge. So, and doing things like this, you know, working towards embracing or improving the industry for a better way of doing things. It's something that it really motivates me and pushes me to work hard every day.
Wonderful, thank you. There were more hands at the back. We got somebody up there, right? If you want to know about the politics of economics, you should listen to the weekly economics podcast, where we explore all of these things in much more detail. Nice plug.
Hi, my name is Ben. Do you feel that especially consumer-facing fintech startups are very much focused on a London cohort of people, and what would it take for someone outside of London to switch their current account to Mondo?
Someone like Les Stiles, my dad, who is 60 and not interested in things like this. Go.
Well, I think the first thing is that Mondo isn't for everyone. So the customer that we're building this for is someone who lives on their smartphone, who is constantly basically checking, seeing what's going on, who wants to be able to do things when they want to do them. They want it to happen instantly. So, for example, my mum often asks me about what I'm doing. She doesn't even own a mobile phone. So trying to explain it to her and what the use is very difficult, because it's just not built for her. It's not London focused. It can be anywhere in the country. We're in very early stages of development, and so geographically, like the most we're situated in London and it's densely populated, so that's where we're spreading the word initially, but there would be nothing to stop you joining from anywhere in the country.
I just want to add with the Envoy hat on. So another reason, and I should have mentioned this earlier in my first remarks, that the government is really keen on fintech is because part of what that enables is financial inclusion. And so this has been a big problem, I think, for the government and governments all around the world in terms of how you include all of your citizens in what's available with either financial services or other things that you can get access to based on financial transactions. And things like Nutmeg or other startups or other technologies, for instance, Nutmeg now offers a pension sort of solution online. It also does wealth management, of course, but it's sort of bringing it to more people than ever before, because you're addressing an audience which probably would not have walked into a private bank to try and go to a wealth manager to figure out how to manage their assets. Nutmeg enables that, from a financial inclusion point of view, to many more people outside of London than any other retail institution could have done.
I think it's also a matter of product evolution. So when TransferWise first started, I'm sure most of the customers were from London or from these tech advanced cities, were living on their smartphones and knew their way around a computer. But now that we've grown, it's been 4 years, we're now starting to reach those people who aren't as tech savvy as were the early adopters. And so now we have to think about, as a product manager, how we can improve our product so then we can reach those types of people as well and make it as easy as possible for them to also experience TransferWise, even if they aren't as tech savvy or native as some of our other customers.
And just to add to that, I think that it's not a sort of generation thing of sorts, but the more older generation is probably less trusting. So the sort of the trust element to it and the regulatory element to it is quite important. I guess it depends what element you're looking at of the sort of the banking and the financial services arena. But we have our typical investor is that bit older than the average age, certainly sort of in this room, for example. And it depends on those adopters, but there's a lot more trust that is being earned. And the industry of peer-to-peer finance, for example, was regulated and has been regulated for the last couple of years. But we were lobbying for that regulation a lot earlier. And I think it's important that everything that's been built actually is maintained with some degree of regulation where appropriate to ensure its longevity.
Did you know that a quarter of people in Hackney, our host borough this evening, have never used the internet? That's my fun fact for you. And we've got another question up here.
Hi, my name is Alexa. I'm a banker who lives vicariously through everybody at these events. But my question is about an FT article that came out today saying that online lenders are living on a hamster wheel. And I quote, the article says, marketplace lenders are highly dependent on new businesses because they get almost no recurring revenue from loans they have written. Meaning that in order to keep their revenues high, they have to keep generating new business because they're not getting any revenue from the actual loans that you're making. So the question for Funding Circle is, how are you addressing this as a business? For Eileen, from the venture capital perspective, how do you evaluate the future of these businesses? And then from the government perspective, are they doing anything about this?
I'd love to see that article, and I'd love to see where they've actually got that information from.
We can tweet the article.
Without being able to see exactly what they're sort of pinpointing to. I think where it comes to sort of customer acquisition, I think if you look at any kind of model, unless you are paying, say, Vodafone or EE, where you are paying a subscription every month, then you will always be required to acquire your customers, if you look at it from a consumer sort of facing angle. Certainly just at Funding Circle, we actually have a high number of repeat borrowers. So the average borrower, the UK SME that borrows through us, a couple of years ago may have taken out sort of 1.1 loans, and now it's sort of 1.4, 1.5. So we are seeing more of those borrowers come back because they like what we provide and the sort of servicing that we offer to them. We did a survey looking at, do you like Funding Circle? Would you use us again? How do we compare to the banks? How can we improve? And 75% of those that we spoke with said they would rather come to Funding Circle first than a bank for their next loan. So yes, customer acquisition is continually important, but we're getting more and more customers all the time, but we're still servicing our existing customers as well. And I'll definitely look up that the article.
And then government and funding.
So I think for this topic, they're probably aligned in that I think that what's more interesting, there's always going to be pros and cons or issues or challenges, I think, for customer acquisition or making sure your revenue is going to continue to grow, your top line, you're going to be able to increase the part of the pie that you're trying to get. But the point for both government in this context and investment in this context is that what you're replacing, because what existed 4 years ago was so less efficient, and what you're doing now is so much better and so additive to what we used to have, that you are unlocking more value, right? So it's not perfect. I'm sure it's not a perfect system. It must be much more closer to perfect than what we had before. So for instance, a lot of people probably had, you know, different views of Wonga. And I'm not here to talk about whether or not that's a good or a bad thing, but if you compare that to pawn shops or payday lenders that were on the high street, you know, on every high street, there's got to be some improvement there, or the opportunity to improve, whether they chose to take it or not. And that's the way, from an investment point of view and from a government point of view, we would see innovation enabling, you know, positivity, even if there are still challenges in the market, in the model.
Right, now I'm going to give you the 5-minute warning. So anybody who's not been brave enough so far, this young man.
Hey, so the title of this is Decoupling Banking Services, but there's a small part of me, which is the cynic in me, which is thinking that, you know, with Barclays and their accelerator and, you know, venture capitalists involved, and that actually they're going to just recouple it. They're just going to buy up all of these young startups. There'll be a few unicorns who make it through. How long do you think that this is sustainable, that these young companies can think that there is actually room for everyone when there's never been such a kind of formidable industry and rich industry as there has as banking? Okay, music got taken over, but banking is much, much bigger and with a lot more wealth behind it to actually just buy up whatever is challenging them. How do you guys feel about that?
Probably just refer back to the metaphor I had before about the portals. I mean, you could have asked the same thing about the Yahoos, the AOLs, the Lycos, Excite, what were the other ones? You could sort of argue, oh, when this Travelocity thing was coming up or Expedia was coming up, what's going to prevent it from eventually trying to offer more and more services? I just genuinely don't think it's necessarily the case that we will have people recoupling services. I believe in market forces, and I think what's more efficient and delivers better value for the consumers will win out in the end. If it turns out that the decoupled service providers can't do that, then yes, there will be an aggregation, things will get commoditized, and you'll have a sort of a sweeping up, and one provider will offer it better. But if the independent companies that we're funding now and that we're seeing emerge continue to offer great value, there's no reason why they're not going to overtake the incumbents who just can't move quickly enough.
Are there any more hands? You want to follow up? Wait, sorry. Two boys.
Just to follow up on that one, large financial services companies, one of their strengths is that they have like scale and balance sheets and leverage. Like startups don't have that. So following with your example, like if you're to have those large companies like Yahoo replaced by like a sea of small companies and something like media, that would work quite well. But for financial services, it doesn't really fit in that you need to have like that leverage, and you can't have a lot of really small financial services companies.
That's true. I'll let Laura answer it too, but I'm going to steal what Laura said earlier, which is what they do have, the incumbents, is operating expenditure or capital expenditure at a scale that the startups don't even have to deal with. You know, the number of retail locations, the number of employees, the fact that they have to pay their employees pensions, you know, for hundreds of thousands of workers, that alone is like an anchor around their neck. These institutions are not going to be able to be as agile as the upstarts.
Thanks. And just to add to that, if you look at Uber, as a business, Uber owns no cars. If you look at Airbnb, Airbnb has no fixed assets to put people up. You know, if you look at Amazon, Amazon has no inventory. So actually, the lack of a balance sheet is actually what's driving the strength in many of these companies.
And on that note, I mean, I had quite a lot of questions written down here, but it doesn't. No. But I mean, I don't want to ask a rubbish one now because we've had such great ones from the audience. I guess maybe to finish, the financial sector has historically been incredibly male-dominated. Do you think this has had an impact on the way that these businesses were built and the way that these businesses have worked over time? And do you think that having more women involved would change the way that services are created?
I think it's had a big impact in the culture in some of these businesses. From personal experience, when I've gone and consulted some of them, it's a very aggressive, competitive and cutthroat industry. And so I think that is changing slowly, but it's much easier to change when you start your own business than it is to change 1,000 of people wide organisation. So that's a big change that I think.
Yeah, I mean, at TransferWise, I think we're about 50-50 in terms of women-male ratio, male-female ratio. But that being said, it's still you still see women in more sort of predominantly female-led type of roles, so like in PR and marketing, and in product management, for example. I think I'm one of 2 or 3 product managers who are female. So, but I know that as an organization, we're actively seeking out more female product managers and more female engineers. So then the whole organization is balanced and not just in certain not balanced on a like heavy in one area and then light in another area.
And I think that diversity, full stop, is a great thing. Innovation is a great thing, and if you get lots of different individuals, no matter where they come from, you know what they look like, or you know whether they're male or female, I think that will help drive growth in the industry. Certainly at Funding Circle, it's almost not even an issue. It's not something that it's sort of just. It's not even. We're not even aware of it being a sort of there's different genders in that respect. It's like it's sort of we're all just driving forward. And I think as an industry we're all driving forward as best we can. So I don't think it sort of features all that much, but you know we're probably very lucky here in the UK and in London that we are in that space, and I don't think it's as fortunate in other places perhaps.
Cool. Right, well if there aren't any more questions, this is your last chance.
There you go.
I just wanted to ask about where do you see your biggest competition? Obviously, the US is really, really strong in terms of fintech, but other than that, which markets do you think are going to see competitors coming in? Which are the strongest markets apart from the UK and the US?
So I think from our perspective, there are a couple of very strong competitors in Germany already. So number 26, Fidor, they're doing innovative stuff there. So that's a pretty strong market that we're very aware of. I don't know if anyone wants to add some more.
I think we're quite privileged because we were one of the first ones in the FX transfer scene or fintech scene. So we don't really, I mean, there are other companies out there trying doing international money transfers, but none that we believe are doing it quite as well as we are. But I mean, it doesn't mean that we can get to rest on our laurels, but it pushes us to keep pushing harder every day and making our product as best as we can make it and make our customers happy.
I think when you look at globally, other markets, yes, the US is sort of advanced. You look at Australia even, and as well as Germany and other European countries. But actually, interestingly, look at China and India. I mean, China alone has a sort of 1,000 peer-to-peer players. It is quite phenomenal, the growth that they've seen there. And I think that competition ultimately is a good thing across all of our industries. Keeps us on our toes, keeps us innovating, and makes sure that we don't die ultimately. So that's what we want to make sure we do. Maybe we shouldn't end on that.
Macabre. Right. Well, if everybody has, be brave. There you go.
So, Aline's analogy of Yahoo and portals seems to favour the kind of agile aspect of it, but the analogy is almost a little bit broken in the sense that people like Yahoo and all that were not constrained by regulation, which of course the financial services sector is very much constrained by. From that view, how do you see the future evolving with things like Payment Service Directive 2, kind of almost making the analogy a little bit more comprehensive?
Meaning that you think regulatory conditions favour the incumbents or favour the new companies? I heard people in the audience saying
I was more asking you whether it supports your analogy or it kind of violates it a bit more.
I kind of still think I think the metaphor is still relevant, because I think when those portals started, they were actually dealing with other kinds of regulatory issues, whether it's advertising related, child safety related, bandwidth, broadband access, or internet service provider. They were ISPs to start, right? So they had just different things that they had to deal with. I think every industry always has its existing outdated regulatory construct until a new upstart or a new scene comes along and says that's completely antiquated and no longer relevant. So within fintech, I think the important thing about regulation, or what I'm trying to appreciate more as a fintech envoy, is that regulation in theory exists to support the industry and the framework there, but mostly to protect consumers and participants in the ecosystem. Obviously, over time, it feels less and less like that and more like a burden for everyone involved, but in theory, that's what it's there for. And so, in theory, it shouldn't favor one or another part of the ecosystem, whether it's existing or new entrants, and it should always be there to protect consumers or other participants. So I'm being a little idealistic, but I don't think in theory it should impact one or the other. And hopefully things like having an envoy or working with trade groups like Innovate Finance and talking to teams and startups and the incumbents helps to make sure that that balance is maintained.
Wonderful, Eileen. Well, I think we all want to get to the wine now. Just a journalist in the room. So it just leaves it for me, I guess. Or you might want to, actually. Sorry, maybe it leaves it for you. To thank everyone involved again for coming, for giving me the chance this evening to talk to some of the brightest and best in perhaps the most important tech field that we may have ever witnessed in London. Thanks to Idea London for hosting, as I said, McLaughlin's for the tasty treats, and of course Girl Geek, Meetup and Mondo for bringing us together, and all of these lovely people and excited people for this event. Thanks to our speakers for taking the time out, and also big shout out to Tash and Kaylee for doing all the behind the scenes work that makes all the hard work that goes into pulling off something like this look entirely effortless. And thanks to all of you for coming, of course. Let's give ourselves a huge clap.
Thanks very much, Kirsty, Eileen, Leah, Wendy and Laura. That was brilliant. I hope you all enjoyed it. I hope you also enjoyed the slightly random social media streams that were coming up. We had a Mr. Banks marrying a future Mrs. Banks, hashtag Future Banks, for their wedding earlier. So luckily we didn't get any nice wedding pictures today.
So yeah, again, huge thanks for us. As you may have guessed, we're really excited about FinTech at the moment with Geek Girl, and we're hoping to run more events like this. So if you've got a topic that you'd like us to specifically focus on, then feel free to tweet us with the hashtag FutureBanks, and we'll make it happen. Yeah, and if you want to hear about more Geek Girl events, you would all be very welcome. You've just got to go to our website, geekgirlmeetup.co.uk, sign up for the newsletter.
Just to plug myself, I don't know if you know Paul Mason, Channel 4 economics editor, is going to be on one of the first editions of our podcast going out next year. He's written a book called Post-Capitalism, which may bring down all of the things that we've just talked about. So if you're interested in understanding some more of the systemic issues in economics, and I guess what kind of fintech kind of operates in, then please find the Weekly Economics podcast on your favourite podcasting app.
Great. There is much more wine to drink, so we don't have to leave the building just yet. Go upstairs, mingle, drink more wine, and thanks very much for coming.